We've had quite a run here. Gold only a couple of years ago was back in the mid to low 2000s, and I've raised my targets a few times since then. I was at 3,400, and then I raised it to 4,000 and 5,000 and 5,500. And yesterday I raised my price, and then 6,800 in February after the sell off. Yesterday I raised my target to 7,000. I think a lot of it is monetary. We're obviously seeing all kinds of, money printing around the world, not so much short term here, but over time that's been the case. I think you're going to see a very weak dollar going forward. I think that will be part of the move from 4,400 up to 7,000. And obviously, there's all kinds of geopolitics out there, and lots of reasons to have consternation about worldwide situations. So I think gold gets a bid under those circumstances, and the other metal, silver, also does. And I also raised my silver price yesterday. I had increased it coming into 2026. In my first quarter letter, I increased to 125, and we quickly got up to 122 within weeks of that. And so when it sold off the first time, went down to the mid 60s, I raised my target from 125 to 180. And yesterday I increased my target to 200. So that's where I'm at. I know there are a few people out there higher than me, but not too many. Most, Michael Oliver is the high guy out there on the street talking about $300 to $500 and saying it could happen this summer. I think my 200 could happen this summer. Doesn't have to, but I think it could. And I don't, I can't get to 300 or more right now, but I certainly don't, I respect Michael's work, and if we get there, more power to him. Yeah, well, I am forever telling people on X to stretch their time horizon and have stretch out their viewpoint to have perception, because I think you can, or to have perspective, because I think you can get caught up in the day to day, and it seems like forever. If you're watching the price day by day, when it takes a month to move, everybody's going, oh, it's stuck in the mud. What's going on? When you're looking at a picture that's 20 years or 10 years or even 5 years, you get an entirely different perspective. I mean, gold's had a great run from the low 2000s to 5,500 in a couple of years, a few years. And people then expect it to do that all the time. It's like they, and it is moving. So what we've had since February, we had, the big run up to 5,500. That was a big jump. I mean, we were down at 3,000 not long before that. So that was a big run. It needed to consolidate that, and it did that initially in February, and then the Iran war started in right as March 1st came. And again, the metals are risk off. I mean, they are risk on. And so when the market decided, when investors decided it's time to take some chips off the table to reduce our risk because of what's going on in Iran, it wasn't just the stock market, it was metals that got hit. So I think, number one, it was a big run up, so it deserved a consolidation of a few months. And number two, the Iran war gave it an excuse to carry that. The first sell-off in February could have been it if we hadn't had Iran, but it probably makes more sense that it did need more time to consolidate. So I don't view it as anything but just a normal consolidation. I know there are people talking bearishly and lower prices, and it has to go back to whatever, below 4,000. I don't think so. I think we're very close to a turn here. Could be any day now. And I think it's off to the races again. Now, obviously, Iran's still sitting out there as a problem. Until that, if we get a negotiated settlement and the strait opens up and oil prices come down, and it looks like Iran's been resolved, at least for, quite a while, I think that will will cheer up investors everywhere. Stocks, bonds, metals, everything. So Iran's still kind of the big thing sitting out there that needs to get resolved. But it's hard to know. The Iranians play games. They talk like they're going to meet you and have a settlement, and then the terms change, or they make ridiculous statements or what have you. I think you just have to let that play out. You can't guess it, but I do feel looking at the markets themselves, without trying to guess Iran, it does look like we're very close to a turn in the metals, and I think it will be off to the races. The amount of silver required in all these new technologies, including AI, in EV, obviously, in solar panels, et cetera. Solar demand is growing. It's not shrinking. And yes, I think I know where it's coming from. There's been talk about substitutions with copper and things like that to try to, and that's an economic postulate that's been around forever, is when prices rise for one good, you find a substitution if you can. So that can happen at the margin. I don't think it changes the supply demand picture in any meaningful way that would cause silver to sell off in any big way. And those changes happen slowly. You can't immediately just say, okay, we're substituting copper for silver, or we're doing this or that, or we're just going to stop production because silver is too high. So, and you've obviously heard the government say we're going to include silver in those strategic metals that we need to kind of make sure we can keep the supply coming. So I think you and the other thing about silver is it is a monetary metal as well. It's yes, supply demand from an industrial standpoint is more important silver than gold, but silver is still poor man's gold. When gold moves, because it's $4,400 on its way to $7,000, there are lots of people that would prefer to buy silver at $75. So I think it has a monetary component, even though it is more of an industrial metal than gold is. So I could be wrong, but I don't think demand destruction is the reason to be concerned here. I will say where I think demand destruction will take place is not for that reason so much, but because I have a global bust forecast for next year, could start late this year even. But if we go into global bust, which just simply, I'd say, is something along the lines of 2008-9, where you have a big financial crisis accompanied by a pretty severe downturn in the economy. If we see that, you're going to see demand in all industrial goods, fall, and silver will see that as well. So that's where I think you can get the big correction in the metals. If I'm right about targets or anywhere close, you could have gold at 7,000 and see it fall maybe to 4,000 or below. And, certainly back to 4,000 and above. If silver goes to 200, and I'm right that that's where it goes to, silver could fall by more than 50% in a bust. So that's where I think you'll see the big correction. And by the way, that should not be something that shocks people. We just came through silver going from 122 to 60, to basically the low 60s. So it got cut in half in a matter of days or in a matter of a couple of weeks. So it's not beyond belief to say that in a global downturn, silver could get hit by more than 50%, and gold could get hit by certainly 30 or 40%. So that's where I think you do get a big correction, and then coming out of that global bust, my longer term forecast for gold and target for gold is 20,000. My long term target for silver, which for a long time was $400 or $500, I raised that to 1,000 recently. So I see that as probably sometime out in the early 2030s. So you have to go through probably a weakness next year, and then 28 to say 2032 could be, unbelievable in terms of the kind of price rises we see in the precious metals. If a market, and obviously going back to early February, you had a very overbought market. When you get something like an uncertainty of a war, it's obviously going to change the psyche of investors. It's obviously going to have them. It's actually remarkable that we're where we are. I mean, people forget. In February, yeah, it was, I think before Iran, it was either February or early March. Silver was down to 62 and $62, and gold had fallen down to 4,200. I think it was. Maybe it's slightly below that. We're above those numbers. The Iran war is not resolved yet. It's remarkable. They've held steady. I think the look there is very bullish. We've got wedge pattern in both that look like they resolve to the upside in a pretty vertical way. So I think it's just a matter of probably days before we're off to the races again. Who knows for sure? But I do think it's going to be a strong summer, and you could get all the way to my targets by Labor Day. You might not if it stretches, for another month, 2 or 3. Who cares? But I'm just saying it could happen that fast that we go from, silver at 73 to silver at 200. We could go, gold at 4,400 or slightly below to gold 7,000. Those are remarkable runs if they can happen in the next 3 or 4 months. I did when I raised my targets on the metals yesterday. I also raised my targets on all 4 of the indexes that I forecast. So the S&P,